Good evening, fellow Forex traders. It is January 8th, 2019. Happy New Year. It's been a while since I've done a video. I have been, busy like everyone this time of year, family, holidays, etc. But yeah, hoping to do a few more of these and see if I can get some consistency going under my belt. But anyway, I wanted to talk about the euro dollar because it's my favorite pair to trade recently, and I hope that we have a potential breakout coming. I've been hoping for this for a while. I've been trading this nice looking range here quite a bit, and I just feel like maybe this time's going to be different. We'll see, but I'll run you through my logic here and see if you agree. So the key areas obviously here are this 115. It's not so much a line in the sand as it is a zone. Um, and you see we've had some pushes through here. We touched, danced around it, dumped through it, popped right back through in this V recovery, danced around it some more, chopped around in this area, tried to get through again, failed, close, fail, fail, fail. And the pressure's on now, right? We see this series of higher lows. And again, this 113 zone's kind of been the bottom, mostly here from this low, ever since we made this low here in August. Touch again, dump, back up, chop, same kind of things, 115. Not a perfect line, but a good zone, right? But again, we're making these higher lows. And for the most part, we're keeping this pressure on the ceiling here. And I just get a feeling, and if we that we're going to push through it. If we bump out to the weekly real quick, you can see we've been supported by the 200-week moving average extremely well. We only had this 1 week close below it. It was barely below, right? This is a close. I'm looking up top left here, 113.05. And at the time, this 200-week was 113.13. So it closed below, 8 pips below. Instantly recovered the next week. And it's been supportive ever since. So I've been watching that, and the fact that we haven't been able to get below that 200-week moving average is might be a tell. It's definitely hasn't been easy. And then when we clock down here to the lower time frames, I'm seeing a nice little bull flag developing here. This most recent run up. I caught a lot of this, most of this. I shorted the other night down here, covered probably 20 pips or so too early, and I started buying again too early. But I'm long from I think about 114.45, and it's starting to show some strength coming out of this bull flag. And I think if we can do that, here we can even see it better on the hourly too. We've kind of, this last hourly candle 2 hours ago, pushed through there a little bit. I'd like to see a little more follow through. But I mean, it feels like we're trying to break out of this thing. And if we do, I'm hoping finally that's enough momentum to get us through this 116 or 115 zone. And beyond that, I'm watching this area here because this is kind of the next. If we get above this, there's really not a whole lot until this congestion that we had, kind of in the 116 area. If you pop it out to the daily, this is that area we're talking about. Let's just do a little here. You kind of take that wick, come into these bodies a little bit. We're kind of looking at this zone. And what I really like about this, let's get rid of that, is you've got the 200-day moving average coming down. So you're going to have, if we do blow higher here and get up to this area, it's going to be a nice confluence of resistance. You've got this little bit, you've got the 200-day coming down. So it's a nice place to look for potential targets, right? So this is somewhere in the 115.80 up to the 116.20 zone. It's a decent move, especially since we've had so much chop. And my hope would be we see a move up to there. We either consolidate sideways and blast higher again, or we come down, test this 115, move higher once again. And I do have a USD bearish bias at this point. And I'll give you a couple of reasons why. First, the US dollar chart just doesn't look bad. It doesn't look bullish to me. Regardless of the support here, that's nice and all, but it's been tested quite a few times, and I think there are some technicals and fundamentals that are overriding the potential for this support to hold. Before we get into that here, just this is the 4-hour chart, right? And this bottom was tested here. I guess this was yesterday. It kind of came up. Looks like, it's looking pretty weak. The moving averages are all what I like to call purely aligned, where you have the 50 period moving average, the 100, the 200, and you see in a downtrend, you want to see that 50 below the 100 below the 200, and you want to see those moving lower. That's what I call purely aligned. It's just a term I like to use. But so you've got this resistance here. Even though I kind of drew this from this congestion area, and it's not great because we did see a lot of easy chop through that. So I'm more looking at these moving averages coming down and providing that resistance. But it really looks like this little floor, temporary floor here, is going to break. And again, if we bump out to the daily, even the weekly, we see this rising wedge formation, which I had deleted for a while. I took it back in, but it's significant, right? If you're not familiar with the rising wedge, it tends to be a reversal pattern, and in this case, breaking lower here. I mean, it can be a continuation pattern. If you look at this trend, it's a downtrend. We consolidate in a rising wedge, and it's when you can't sustain significantly higher highs, right? Prices getting compressed here, higher lows, higher lows, higher lows. But these higher highs, you notice, are just increasingly underwhelming, if you will. And then on top of that, you've got some bearish divergence with your RSI from, call it this high here to, if you're doing this properly, it's body to body. And let's give this a different color just for clarity's sake. Go yellow. So you see that. Let's just even zoom in here a little bit more. You've got this high here, which you see matches up with RSI's high here. Let's bless this out just so you see what I'm talking about. And then the RSI is calculated on 14 periods. So you want to make sure these are only 14. Hold down the shift key, you drag this out. There's 14 bars, right? And you can see, here's a good example right here. This candle made a clearly higher high, this green one. And RSI here failed to do the same. Pretty simple. Let's bring this down to this one. And then it's kept going, right? We made another higher high, another higher high. And you can see, let's make it even another line. This RSI continued to trend lower. That's not a great color choice. So what you're seeing is continued bearish divergence into a rising wedge. And overall, it's very bearish. And again, you had what was previously a very clear downtrend. So this is purely technical, of course. And if you want to look at a case of bullish divergence here on the weekly, here's a great one. Resolved higher into this rising wedge. So here is the the technical case for a weaker U.S. dollar. We also had our friend Jerome Powell of the U.S. Federal Reserve. Where do I want to go? Talking the other week, last week I think it was, after the rate hike, and he sounded a lot more, some people would call it accommodative, dovish, whatever you will, but he's hinting that the rate cycle hiking may be done, right? And if that's the case, you start looking at this economic calendar. tomorrow, 9 a.m. Eastern, Fed member Evans speaks. We've got Rosengren, I don't even know how you say his name, speaking the same day tomorrow at 11:30. You've got the meeting minutes coming out. You've got, let's see if we see any more. Here's another, yeah. Powell speaking again on Thursday. Bullard speaking. Evans speaking again. So my point is, there's going to be a lot of headline risk coming for the US dollar. And if Powell's stance last week when he raised rates is going to be consistent, and I believe he mentioned that the Fed wants to be transparent, and if he's already signaling, this is the second time that he signaled, hey, we're probably going to be, we're getting toward the end of the rate cycle, hiking cycle. What do you think these other guys are going to be saying this week? I highly doubt that they're going to come out and start giving some hawkish comments. It just wouldn't make sense. It doesn't go along with the narrative. It doesn't stick along with, the being transparent. They don't want to send conflicting signals. So I'm hoping this is the week that we see a catalyst for a weaker US dollar, and what will result in, Euro finally breaking through this stupid, annoyingly frustrating 115 zone and giving us something to really trade some good ranges, some good trends with. So that's what I'm seeing. I'm not going to go through any other pairs because, frankly, I'm not watching any other pairs. Euro's been my play for a while. I'm doing well with it in this range, but I'm ready as everybody else is to get a nice move out of it. So hope everyone's trading well and had a good holiday season and is ready for a great 2019. Talk soon, gang.